interest rates. Sometimes we'll see like that you have the interest rates, and then also we'll see the APR. So what's the difference between the two? Can you explain that? Because I know that there's some nuances to it. So how does that work?
Yeah, so the interest rates, it's a cost that the consumer pays each year to borrow the money, and it's expressed as a percentage. It does not reflect any other fees that were involved in the transaction when they got the mortgage. So this is the interest rate. For the APR, APR stands for annual percentage rate.
Okay.
And it's broader measure of cost of borrowing the money than the interest rate. And the APR reflects the interest rates, points, mortgage, broker fees, and some other fees. So here I have a most common list of fees like mortgage insurance, origination fee, processing fee, title fees, application fee, discount points. The actual list can be Googled, and it's could be like 25, 30 items.
Okay.
And there's multiple websites where they actually give very good information about it with the breakdown, what's included in the APR, what's not included. So important to remember that the interest is paid based on the interest rate, not on APR. APR is just something that shows you that there are some other fees that were involved in getting the mortgage. VA funding fees also included in that. So naturally, APR is always higher than the interest rate because it does incorporates and includes some of the closing costs.
Okay. So APR is if you took all the fees that you took when you took the loan out, and it takes those and it kind of amortizes it over 30 years, and then and then but the PITI, your principal, interest, taxes, insurance, that monthly mortgage payment is not based on APR, it's based only on the interest rate.
Exactly.
Okay, so it's kind of like a disclosure to let people know that this is what you're actually paying if you did this whole 30-year mortgage. This is what the actual mortgage costs you, because that includes all the fees. Is that?
That's correct, and that's basically we have to disclose APR with every quote that we provide on loan estimates, and APR could be used as comparison when they compare other lenders. They can see what what fees. Some lenders have higher fees than others, but you still want to actually look at the actual breakdown, because APR includes title fees, right? Some lenders may be overestimating title fees because it's third-party fees. We don't really know exactly how much is going to be charged. We know only our fees, and that's about it. And everything else there, like title fees. It's something different. So you still want to compare the rate and look at the processing fees or origination fees. Some companies have only origination fee. Some companies have processing and underwriting fees. They break them down so it looks like it's smaller amount, but when you combine them together, it's maybe higher than somebody else's origination fee.
Gotcha. Okay.
And Tatiana, when you are putting the estimates for the third party fees, such as title, don't you like to overestimate for the loan estimate part, so that, because isn't there a certain window, like a threshold that you'd have to meet in order not to have to pay something? Isn't that right?
Right. So they're holding us accountable in estimating, and if we underestimate, some fees have zero tolerance in underestimating, like sales taxes, right? Transfer tax. If I underestimate by $1,000, I have to pay. I have to credit the borrower for that.
Gotcha.
That's why we like to overestimate, and it's always better, right? Because it's better for clients to have a nice surprise at the settlement that they need to bring less money.
Yeah.
For the title company's fees, we do have 10% threshold
Yeah,
in underestimating, but it's not that much. So yeah, we tend to overestimate, and especially when it's not a affiliated or partner title company, we don't really know what their
Yeah.
fees are. We just estimating.
Yeah.
okay.
Yeah,
Yeah.
that's why I personally prefer to overestimate.
Yeah,
I think that's good, but it's also good to point out again that if people are comparing different loan estimates, they really have to speak to you so that you can show them, like, look, I'm probably overestimating the title fees, for example, and you're able to shop for your own title company, right? And they might be underestimating that, and you might be overestimating, where with everything else, yours might look either the same or better. It's so important for them to know exactly what those numbers are.
yeah. So as always, talk to your lender.
Yeah.
Talk to Tatiana.
Right.
Yeah, I completely agree. And what I always tell clients, look at interest rate and lender's fees, discount points, origination fees, or such.
Yeah.
Because everything else is third-party fee, and doesn't matter which lender you go with, those fees are gonna be the same.
Yeah,
Yeah.
yeah,
That's why it's important to understand that. Don't just look at the interest rate and the bottom line, because bottom line includes somebody else's fees. Look
Right.
at the breakdown.
got
Yeah.
it.
Very
Okay,
good.
makes sense.
Yeah.
All right, answers my question.
Me too.
All right,
It
anything
was
else?
easy.
Yeah, we're easy this week.
No, nothing else. I just hope you have fun in the snow.
Yes.
I will. I'm gonna go very soon and slide down. I've been waiting listen, I'm from Siberia. I've been waiting for snow for so long,
Yeah,
and finally.
yeah, yeah. Well, enjoy it,
Yeah,
and
that's so
we're gonna
good.
enjoy the warmth.
You have to send me a picture of you, Tatiana. I want to see you in the snow. Take a selfie.
I will do that. And tonight I'm gonna go to hot tub, so I'll send you a picture
Ooh.
from the hot tub.
Yeah, there you
It's
go.
nice to be in the hot tub and look at the snow.
Yeah.
Come over, guys.
That's
We'll
great.
have fun.
All right. Have a safe weekend.
You too.
All right.
Bye-bye.
Bye.